Yesterday, I told you that the video I was going to show you was the most important video that you're going to see in 2023, and I'll stand by that. I think it is because it explains that, yeah, we're going into a new era, but we're not creating a new product as we did with the internet back in 2000. We introduced, actually it was in 1989, we introduced the internet, and that spawned new companies such as Apple, Google, Amazon, Microsoft, and Meta. Those are new companies. What's happening now is we're coming into an era where we're going to enhance the internet to give it more value to you and me, the consumer. And since we're a consumer society, that is, of our gross national product, 70% of it goes to the consumer. It's the people who have the consumers that are going to adapt their existing product and make it more efficient and more beneficial to us, the consumers. And if we can wrap our head around that, we can recognize there are 5 stocks who control the consumers, who have the most consumers, and if they can adapt their product from an advertising-based model or a merchandise-based model to a subscription model like Netflix has done, but they have the more consumers. If they can adapt their current product, they'll grow even bigger and faster than they have in the last 20 years. So with that, I look back and say, God, I wish I could be here for another 20 years, but I'm not going to be. I'm turning 79 next week. So who can I help? I can help my grandchildren. They're millennials. One of them's whatever follows the millennials. So where should they invest now? And then and don't even think about it. In the same big 5 companies. That's it. Because they already have the consumer base. They have the knowledge. They have the best engineers. They have the data to give me what I want, what you want, what my grandchildren will want for the next 2 decades. So invest in them now. So what I want to do in this video is take you through my analysis of why I believe that if you will invest in Google, Microsoft, Amazon, Apple, and Meta today, they will be the biggest gainers out of this artificial intelligence. It's not going to be some small startup SPAC that you invest in and see if it happens. Remember all those SPACs around EV, electric vehicles? Where the hell are they now? No, but Tesla's still around. It was the big monster. It will continue to be the big monster, and General Motors and Ford will step into it. But damn it, they're still car companies, and car companies don't make money. What makes money is big tech companies that have billions of users. Hell, Google has 4.3 billion users daily, monthly. If they can provide them a product for a subscription fee, now they won't get all of them, but just look at the base they're working from. Meta has 2.99 billion users. If they can just get half of them, a third of them, and sell them a product that is based on artificial intelligence and machine learning, they're going to double, triple, quadruple in size over the next 10 years. So I'm speaking to millennials here who have 10 and 20 years in front of them. Let me explain in this video exactly how the numbers work, why these are the 5 companies you need to have in your portfolio, and put it into a Roth IRA, because all the growth will just, every year you dollar cost average $6,000 into it. If there's 2 of you in your group, then you do $12,000, and it grows income tax free. And start right now with these 5 companies. This is not financial advice. No. I'm getting people saying, hey, will you manage money for me? No, I will not. I will share my knowledge. I will share my experience. No, I'll share my visions. That's what I've got, because I've been around longer than most. And I know what's happened in the past, and I can connect the dots to see what's going to happen to the future. Let's get into this right after this disclaimer.
Best of Us Investors presents Kerry Griegmeyer.
What I'm showing you here is, first of all, the history of Apple, Microsoft, Amazon, Google, and Meta since their inceptions and how they have performed as a stock. What kind of return did the investor get on a year-to-year basis? And as you can see, Apple had in red some very good years, in yellow some bad years. But overall, since its inception, it had an average annual rate of return of 45.26%. Doing the same for Microsoft and Amazon and Google and Meta, you see their average annual rate of return. So the question is, yeah, but are they burning out? Are they getting too big to give that kind of return as we move into the future? So what I did was I'm showing you now here not only the 20-year, which Google and Meta don't qualify for, but also the 10-year. And you can see they've actually in 10 years done better than they did since their inception. And then also for the last 5 years, and you can see what they've done there. So they aren't losing their muster, if you'll follow that. Then what I did was I said, okay, these are the largest companies in the United States, at least the first four are. Why is that? And if you understand that the United States economy is consumer-driven, meaning that consumers consume more than businesses do, 70% of our economy is consumer-driven. Well, they're all in the consumer category. In fact, here's their market caps. And the first four are the four largest market cap companies in the country. And Meta is down at 759 million, which makes it about the eighth largest company. So then what I said, okay, if they are consumer driven, how many consumers, how many monthly users do each one of them have? And what I've done is research that. And you see Apple has 1.46 billion users. Google has 4.3 billion, and Meta has 2.99 billion users. So then what I said was, what is their current revenue? And as you can see, Apple's current revenue is 394 billion, while Amazon's is 538 billion, and we have Meta at 116 billion. So then I said, okay, how much are they making annually off of each of their users? And you can see that Apple makes $269 off of each of its 1.46 billion users. On the other hand, Amazon makes $1,735 off of its 310 million users. Meta only makes $39 off of its 2.99 billion users. So then I said, okay, that's what they've been able to do with their concepts thus far, particularly Google and Meta, who actually charge nothing for their services. They are an advertising-based business. What if they could improve their product in such a way through the use of artificial intelligence, and then generally in the future from general intelligence? What if they could create a product which was worth $30 a month to me? Now, why did I choose $30? Because Microsoft has already announced that they will make their Copilot, which is a AI-driven platform, available to businesses at a rate of $30 per user. Okay, so that's how I came up with that number. And then it was supported just this past Tuesday when Google came out and said, we have an AI product that we will make available to businesses and to individuals for $30 a month. Okay, what might that look like? I did a video yesterday that went into it, but I'll brush over it a little. It's going to be a concierge service. It's going to be a concierge service that takes care of everything from your accounting, preparing your taxes, to dealing with lawyers, to dealing with Doc in the Box or travel agents, or any kind of customer service, any kind of question that you have, that you want some in-depth knowledge, rather than going to one individual and asking that, you go to the world's total base of knowledge through Amazon, through Google, through Apple, through Meta, whatever, and you pay $30 a month for it. as I said in yesterday's video, this may sound absurd to you, just as when my father, if I would have told him back in 1955 that eventually I will be paying over $100 for the TV that comes into my home, when he's getting it for free back in 1950. He was getting it free, had a big antenna. I covered all this in yesterday's video. He would say, no, there's no way I would pay over $100 for my TV service. Well, Dad, I'm paying close to $150 when you figure in my provider, the different streaming services that they offer. And now they've even got one that'll give you all the professional football teams. He would have bought that one on a package. So TV has moved from a advertising-based service to a subscription service. The same thing is going to happen to these 5 stocks. And the one that excites me the most is, what is Meta going to do? What are they going to do to enrich my social media life and charge me $30 or need a $30 a month? I'm sure it's going to happen. So with that in mind, I then said, okay, if I take the number of users from Apple, 1.46 billion, and Apple gives me a service that I'm willing to pay $30 a month for, what kind of revenue will that build? And it comes out to $525 billion, which is more than their current revenue at $394 billion. Go across here, and you can see Microsoft's revenues go from 211, and it isn't up to 5. No, this is an additional 504 billion. Look at Google. Current revenues, 282.8 billion, is going to go to $1.548 trillion. Yeah, that's trillion. From 282 billion to 1.548 trillion. Meta, again, I don't know what they're going to do, but I trust that Mark and his team will figure something out. Their revenues will go from 116 billion to an additional 1.076 trillion. So if I'm a millennial and I'm going and I'm working every day and I'm putting money into a savings account, hopefully a Roth IRA, these are the 5 stocks that must be there. They must be there because they have the most users. Again, TV was all supported by advertising. Google is all supported by advertising, as is Meta, as is some elements of Microsoft, Amazon, and Apple. It will go to a subscription service. And why? Because they have the users and because the U.S. economy is a consumer-driven economy. As far as that goes, the whole world is a consumer-driven economy. This is why these are 5 stocks that every millennial must own, and just blindly put $6,000 a year into their Roth IRA. So when this is all over, when you turn probably 70, because of Social Security, they'll raise the retirement age. You're not going to have $1 million. You're going to have $1 billion, and it's going to be tax-free income. Roth IRA. Come to our website. I'll share this on our website. I'll share my knowledge about Roth IRAs because this is the most important decision you're going to make in your investment lifetime. Trust me on that. As I said, next week I'll be 79 years of age. I've had a lot of experience. I've been involved in this stock market for the majority of those years. The first stock I bought was Beech Nut chewing gum because I liked it. I'm a consumer. And so you invest in those things that you use. Peter Lynch used to say, if you want to know what retail store to invest in, just go look at the parking lots on a Saturday afternoon. The one that's full is the one you invest in. That's the same as your life. Invest in the companies that most of the consumers are using. And I just shared the 5 names that I think that if I were a millennial, and that's our wedding picture on the thumbnail, I wasn't even a millennial then. I was in my 20s, 22, I think I was. But if I had put $6,000, and there was no such thing as a Roth IRA, if I had put $6,000 a year into companies like these 5 who are not inventing a new product. They're just enhancing the product they have based on the data that they've gathered and delivering it to me to make my life better and your life better. So that's where you want to invest. I'm Kerry Grinkmeyer. I'm a retired financial advisor. Those are my certificates for CFP, CHFC, and CLU. But I've learned more about investing over the last 4 years that I've been doing YouTube, and particularly as I recognized what is happening in our world to adapt our infrastructure, our internet infrastructure, to accommodate this sharing of data through the internet, and that we need to upgrade our data centers, and that's on our Bus 13 portfolio. And then the adaption or the delivery of that data through software, and those are the companies who have the users, me, you, and the other, what is it? Meta has 200, no, Google, I'm a avid Google user. I'm one of 4.3 billion users who are going to pay Google. I know this as well as I'm sitting here. I will be paying Google $30 a month within the next 8 months. Yeah, I will, because they will make my life better. They will give me access to the data I need to make good decisions in every aspect of my life. The question is, what is Mark Zuckerberg going to offer Nita that is going to say to her, Kerry? She doesn't call me Kerry. She calls me Kobe. Kobe? No, what does she call me? Yeah. She'll say, I need $30 a month so that I can communicate better with my grandchildren. That's what she's going to say. And you know what I'm going to say? Okay. All right, I'm Kerry Grinkmeyer. I'm a retired financial advisor. I think I can make your life better, but you're going to need to join the tribe. And how do you join the tribe? You go to our website and you get on the bus. I'll talk to you again tomorrow. This is exciting. This is, I've said this before and I'll say it again. This is the investment opportunity of your lifetime. And mine, as far as that goes.